This is part 3 of how to make and keep money in crypto. If you haven't seen part 1 and 2, make sure you check those out first, about the long-term approach, plus how to play the rest of this bull market cycle. This is an extension of the second part about how to play the rest of this bull market cycle. And it's very much a time-specific thing, so this is being recorded in November of 2024. And so when we're looking at the charts here, this is where we're at. This is a weekly chart of the total market cap of crypto, and here's where we're at right now. So keep that in mind if you watch the recording of this later, that this information is accurate and current as of right now, and that will change, of course. But I want to make sure that everyone's aware of how you should be viewing this market from here onwards. If everything I said yesterday is right, in that we are following the 4-year cycle, roughly, which we are so far, and if we have a bullish 2025 to come, whether that's 6 or 12 months, who knows, but let's say we extend this cycle into 2025, then there are some key things you need to make sure that you are following. Number one, you should be allocating and holding now already. If you're not, this is the last chance to get your bags filled. That is not supposed to be a FOMO-driven statement, which I'll explain in a moment. But if it is correct that we're going into the final year of the bull market, you do not want to be adding more money into long-term holdings, into spot holdings, beyond the end of this year, beyond the end of 2025. 2025 will be a short-term trading year, it will be a medium-term swing trading year, and it will be a profit-taking year for people who are allocated from lower. First thing you have to accept is, if that's not you, then that's not you. Right? If you didn't allocate or weren't around or weren't into crypto here or anywhere here or even anywhere here, if you weren't around or you weren't paying attention through all of this, okay, you can't go back in time. So the best you can do is make the right decisions moving forward with the information that you have. And I'll tell you very, very, very clearly that this was the time to be buy, hold, consolidate, accumulate, all of that. And next year, for bigger players and for everyone who's smart, it will be a profit-taking year. That doesn't mean the markets go down. In fact, it's the opposite. The markets go up and they go even more crazy than ever as there's more and more money flowing in and there's more and more interest and hype and there's good news stories and volatility and all that. But throughout all of this, the smart money will be taking profit. So however much you get into your spot bags, however much you save up and put in by, let's just call it the end of the year, 31st of December, you shouldn't really seek to add more than that. What that means is, do not make the mistake of buying altcoins all the way through 2025, every week or every month when you get paid. It's not to say that you can't put more money in, but it would more so go onto the trading bucket, which is more the short-term stuff. The idea being that if you keep, and it's just about being aware of it, if you keep stacking and stacking and stacking and putting more and more and more in, you're probably going to be raising your average entry, and you're most likely adding new long-term capital into a market in which the bigger players are actually taking profit. So you're being exit liquidity. So however much you have in spot by the end of this year should be your core holdings that you just hold for 2025. Obviously, you hold until you see signs that you want to rotate or you want to exit. 2025 is about realizing gains, right? So it means you should be positioned before 2025 to realize those gains. And that means the market is most likely going to do something like this over the next few weeks. If I'm correct that this is the last chance to fill your bags before the next run, before the bull market begins proper, phase 2, then you will likely see the market not go like this for the rest of the year. You will probably see the market go something like this, where it's up and sideways. And this actually would be an attempt by people who are sidelined but have big capital to get as much filled as possible. So there'll probably be a lot of FUD. There'll be attempts at manipulation. There will be attempts at suppressing price as much as possible for the rest of the year as people try to get filled and on board before we kick on into next year. This would align with previous market cycles pretty well, where you look at the end of the year, there is usually some kind of consolidation going into it. Q4 is always a bullish quarter, right? So in Q4 we always go up, of course. You can see here from September until the end of the year we went up. But going into the end of it, you see this area here where price starts to slow down and consolidates right into December. This was relatively short. This was about November into December. It couldn't really hold itself from breaking out. So it was just, there was so much upwards pressure. It was like a beach ball being held underwater, that old analogy. And it took off as we got into January. Part of the reason for that is because people will not be adding new money in. So whenever people are allocating, whenever people are buying, if you look at like any type of distribution or accumulation structure, it's supposed to be an example of smart money accumulation, and accumulation will stay within some kind of range or consolidation. When you start to see the market properly marking up, that's not a sign of accumulation anymore. It's a sign accumulation is done, which is why you need to look at where we're at currently, because we have had some large markup candles after a lengthy consolidation. So most of the accumulation is done, right? I've talked about this on yesterday's video, or if you're watching this in the future, on part 2. Most of the accumulation is done, and the best you can hope for is a short consolidation, some kind of short, sideways period that's sideways grinding higher, as the last sort of vestiges of people trying to get in are chasing in as best they can. Imagine it a little bit like the November move from last year, where we had the breakout and then price was upward sloping, but slowly. If you see slow grind upwards, that is big players deciding, okay, we got as much as we could here, we want to get more, and we know it's not going to dip. To expect a large dip here would pretty much invalidate this being an accumulation. The best confirmation that this was a valid accumulation for a breakout, of course, is number 1, it just continues marking up and everyone gets left behind, which definitely can happen. But number 2, it stays upwards, grinding into the end of the year, or somewhere like that. Again, it can take off at any point. The point is not that you wait until the end of December and hope this materializes. The point is to say that if this is playing out like a regular market cycle, this would be the last chance to get any spot bags filled before it kicks on. And it likely will not come back down to these levels until the next bear market. And so it will go and do its thing all the way through 2025. And then when it's all over, it all comes back down at some point later on, right? Wherever it goes, who knows? That's not really a topic for discussion here. It's more so to look for this. If you see it grinding higher, you know that it's people buying and buying and buying. They are trying to get as much spot bags filled as possible. It is not going to dip because they know that this is the upwards phase and it's the last chance to really accumulate before the bigger expansion comes. And then after that, you're looking for dips to buy, right? So if that is the case, then you want to watch for something like this, some kind of sideways correction, some kind of sideways consolidation, or like we had in 2016, as we were going into the last period as well. Same sort of thing, right? We started to move up in November and we really managed to hold it down until, again, December, and then it started to pop off, and that's where the bull market began. All of this, the summer in the halving year, is the last place where people will build positions before the bull market proper begins. And the summer before, right, or summer post-halving, I should say, is where positions get built, usually in a sidewards and then upwards fashion before we kick off for the bull market. And we've had the same thing here. We've had the summer where, again, much lengthier consolidation, which I think is extremely bullish, and we're now breaking out of that and marking up. So your best case scenario is that it goes sideways, grinding up, and not worst case. I mean, if it just keeps going, that's great for anyone who's already allocated. If you're not already allocated, you'll have to be on board from here and use an invalidation, because in this scenario, it should not, for any reason at all, go back down here. There's no way that this is anything other than a bearish signal if price goes back down into that area, right? So that would be a bearish sign. You have to look at this and zoom out. The only reason why it would do 8 months of consolidation and then break out from it is if it's going higher. The question then becomes, does it go higher right away because we're marking up, or does it give a final chance for some positions to be built on the way up before rising? That is about spot bags. That is not about adding trades or leverage or anything like that. That is about allocating and holding now. And the reason why this is happening is because we have a PVE environment, player versus environment. We have a market where new money's coming in. And because that new money's coming in, it's pushing everything up. So if you look, and I showed it yesterday or on the previous video, stablecoin market cap keeps rising and has risen by 10 billion since the Trump election. That's new money coming in. That new money is buying. That new money is not going to wait. It's price insensitive to a certain extent. It's just get on board because we know the next year is forecasted to be good. Next thing then, once you have your spot bags filled, whether it's, how much you want to have in majors like Bitcoin, ETH, Sol, versus what you want to do with your other holdings, whether it's lower cap stuff. The goal, as I said on the previous video, is not to sell that. The goal is to have that as your core, and so that the market itself will do the work, because over the next several months the market will rise, and you won't have to do anything in order for that to go up. So that's where you want to buy it, hold it, set and forget is the key thing here. You want to set it, forget about it, and let it run. The only time you want to touch your spot holdings is when you see an opportunity to exit a position based on, some kind of blow off top or some kind of major top signal for whatever coin you're in, or to rotate based on relative strength, which is where you would say on a higher time frame, you see clear signs that one of your positions you were looking at, one of your coins you're tracking, is much stronger than another. Maybe one of them has finished a strong rally and another one is breaking out from a lengthy consolidation, and you want to not swap for a few days. You're talking about swapping your holdings because you feel that maybe the next wave is going to have better outcomes on a second coin than it is on the first. The way to look at this would be like 2021. We had a set of winners like Chainlink, etc., that did really well in the first wave in 2021 up until May. And then in the second wave, Chainlink made a lower high and was really bearish. And in the second wave going into November, you had stuff like Axie Infinity, Solana, etc., 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 that did really well. Those are not short rotations. You should not rotate your coins. Do not over-rotate. Do not try to overplay this market. Remember what I said yesterday. But there will probably be multiple waves to this. And on each wave, you will see outperformance from one over the other. So, back in 2021, you saw Chainlink and Solana as a good example of this, where Chainlink absolutely ripped and did amazing in the first half or the first wave or whatever, from the COVID lows all the way to its eventual top. That was its bull run. At the same time, Solana still did really well. Solana went up a lot. But the second wave going into November, right, so there's wave one, and the second wave going into November of 2021 into the eventual top was where Solana pulled a massive move, and at the same time, Chainlink just moved into a lower high. So the view of that would be, if you see relative strength that will be in favor of one or the other, you could rotate. Excuse me. So, how would that look? Well, you can see very clearly from this May crash that Chainlink had a blow off top and ended its entire bull run with multiple weekly structure breaks, a complete reversal of its entire bull market wave, whereas Solana did not. Solana still had a crash, and when you're zoomed in, it was still a big down move, but it only fell back down into previous, not even breaking any structure because it was up only, and it held with a much more bullish consolidation, and of course started to break out from its all-time high as early as August. So in August, when Solana had this weekly close at a new all-time high, at the exact same point, Chainlink was in a classic bearish bounce. So when you're looking at that, the relative strength here in August of Solana and Chainlink is vastly different. That would be an example of where you would rotate from one coin to another for a holding period. Again, not a short-term thing. And so, only rotate on relative strength. Don't rotate to try and say, oh, I think it's going to drop, I'm going to go into cash. That is not the goal for your spot holdings until you think the bull market's done, or until we're reaching into 2025 later on and you're starting to pull money out, because that's the goal. Reason why you shouldn't put more money in all the way through 2025 with a long-term view is that probabilistically that is the worst time. If the 4-year cycle even is close to holding like it did before, then 2025 is the absolute worst time to be a long-term investor. Okay, it's the absolute best time to make returns, because the biggest returns come at the end of a bull market, but it's the worst time to buy stuff with a 1 to 3 year view. because after the bull market, of course, you get 2 years of bad price action. You get 2 years of bearishness. And the accumulation has played out the same. The market cycle has played out the same. We've had the recovery year, we've had the growth year, and we've had a bullish consolidation below all-time highs. Everything is lining up pretty much the same as it would in the past to set up for a good 2025 and not beyond. So at the moment, it's PVE, and that's why you see everything just sort of grinds higher and grinds higher and grinds higher, because there's new money coming in that now wants to be into crypto for the next year, and they cannot wait for a significant dip because they know that this is an accumulation, breaking out from accumulation, so it's the last chance to really get on board before things significantly mark up. And after that, it's going to go back to PVP. So money will keep coming in all the way throughout 2025. But you don't want to be one of those people who's putting all your money into crypto in April or June or August. A lot of people did this in 2021 and got trapped because, of course, when the market is like this and you're in the second half of 2021, you might think, well, why would I not put money in here? The reason you would not put new money in here with a long-term view is that even though Solana went up massively from August till November, that was 12 weeks. That's not long-term. That by definition is a swing trade. That's 3 months. That's a short-term trade. When we're talking about the long-term accumulation, long-term Bitcoin thesis, long-term, compounding of wealth over a decade. If you've got part 1 of this series and you're focusing on the long-term, a 3-month period, a 6-month period is short-term. Even if you're a short-term trader, if you're a day trader and 6 months feels like a lifetime to you, yes. But in the context of a market cycle, you're talking about the last 3 months here. That was the last 3 months of a 4-year cycle, because we have a 4-year Bitcoin cycle and a 4-year crypto cycle. So the last 3 months of the 4-year cycle is a tiny percentage of the overall. That's why, even though it takes a long time and people make money and they get drunk on the fumes of a bull market, because when you wake up for 77 days in a row and everything's going higher, it's very easy to forget that things can even go down. Everything feels great and there's people making money, and even if there's a dip, it goes to new highs within a few days. That is the point at which you should be taking profit and looking to get out, right? Not all at once, but you should be scaling out. Because the later we go into 2025, the more PVP it becomes, because the game flips then from new money coming in to getting your money out. And at the end of a bull market, the door to exit is very, very small. There's a limited amount of actual capital in the market. If you look at the stablecoin market cap, right? Stablecoin market cap is what, 120 billion? Or is it more than that now at the moment? It's 170 billion. So that's how much there actually is in stables, the total market cap. So if you're going to sell your Bitcoin, you're going to sell your Solana, you're going to sell your ETH or whatever, you're going to sell it first into Tether or USDC or DAI or one of these others. And even though the crypto total market cap is 3 trillion, there obviously is not $3 trillion in this market. There is 170 billion, give or take. And that, eventually, when we get to the end of the market, everyone's going to be fighting over that same that same pool of actual money. So now is a great time because it's PVE. Now is a great time because things are going to go up. New money's going to come in. And people will buy and they will not sell and they will hold and they will be happy to allocate because there's a full 12 months ahead of good conditions. But once we get to February, once we get to March, once we get to July, once we get to August, provided the market is still in a bullish setup, it's going to be getting more and more and more PVP as people try to realize those gains and get out. So that's the spot holdings. Now, I say most of your portfolio. It's up to you. Everyone can do whatever they want to do. As long as you've watched part 1 and you remember you've got a long-term focus, whatever amount you want to have allocated in spot is going to make up the majority of your returns. Whether you like it or not, it's going to be that way because that's the simplest. It has the least amount of variables, and you're able to benefit from the market, the rising tide, which lifts all boats. So you should probably have the vast majority of your holdings as spot and just have them there and just make a decision to not fuck with them. Because if you watch part 2 and you accept the one assumption, the one belief that this will be the bull market year, then you want to be exposed to it so that you don't have to overplay it. You don't have to check in